The world rewards the loud, the frantic, and the perpetually busy. We are told that to build wealth, one must grind, hustle, and stay glued to the ticker. This is a lie sold to ensure your participation in a game designed for your exhaustion. Financial chaos is not a personal failure. It is the inevitable symptom of the treadmill trap, a cycle where we trade our cognitive sovereignty for the illusion of an edge. Now, let us open the ledger, calibrate our systems, and begin the 15-minute ritual of financial autonomy. The modern investor exists in a state of sensory siege. We witness the flickering of red and green digits, the incessant ping of notifications, and the manufactured urgency of breaking news. To the uninitiated, this looks like engagement. To the systems architect, it looks like a catastrophic leak in the vessel of one's life. This is the cost of noise, a tax paid not in currency, but in the finite biological resource of focus. When we treat the management of capital as an active daily struggle, we are succumbing to a design flaw in our own behavior. Consider the chemistry of burnout. The human brain was never evolved to process the global fluctuations of capital in real time. Every time an individual opens a brokerage app to check the market, a microdose of cortisol is released. Whether the numbers are up or down is irrelevant. The mere act of checking is a submission to the chaos. This creates a state of chronic decision fatigue. Each choice to hold, to sell, to pivot erodes the prefrontal cortex's ability to make high-level, long-term decisions. By the time we reach the end of a trading week, our capacity for rational thought has been spent on the trivialities of price action, leaving us bankrupt of the energy required for meaningful work, deep relationships, or creative pursuits. This is the treadmill trap in its purest form. The harder we run to stay ahead of the market, the more we deplete the very life we are trying to fund. The hustle culture narrative suggests that active trading is a path to freedom. In reality, it is a sophisticated form of artisan saving masquerading as high finance. The active trader is merely an employee of their own anxiety, working overtime for a boss, the market, that is indifferent to their effort. We must recognize that the desire for an edge is often a masked form of status signaling, an ego-driven need to prove that we are smarter than the collective intelligence of the global economy. This is a vanity we cannot afford. In the architecture of the anti-hype ledger, we diagnose this behavior as financial entropy. Without a system, energy dissipates into the noise. The active trader believes they are managing their wealth, but they are actually being managed by their impulses. They are reacting to the shadows on the wall of the cave, oblivious to the sun outside. We see this in the frantic refresh of a browser tab at 3 p.m. or the hollow satisfaction of a small gain that failed to account for the hours of life force traded to achieve it. To reverse this entropy, we must apply the survivability test. We ask, can this system function if I am asleep, traveling, or otherwise indisposed for a decade? If the answer is no, the system is fragile. It relies on the presence of a human operator who is subject to fatigue, emotion, and error. Active trading fails this test every time. It demands your presence. It demands your pulse. We are here to design a retreat from this noise. We are not looking for huge gains or market-beating secrets. We are looking for the silence of a clean workspace and the tactile satisfaction of a machine that runs without us. We are moving from the frantic dance of the speculator to the quiet, cold precision of the strategist. We are preparing to build a perpetual growth loop that treats time as the only non-renewable asset worth protecting. The architect does not build a structure to fight the storm. They build a structure within which the storm is irrelevant. To achieve quiet wealth, we must transition from the role of the frantic operator to the role of the systems designer. We are no longer interested in the signal of the market, which is largely a hall of mirrors. Instead, we focus on the circuitry of our capital. The goal is frictionless execution, a state where wealth accumulates not through willpower, but through the path of least resistance. This is the architecture of quiet wealth, a hard-coded protocol designed to survive our own impulses. At the core of this architecture is the perpetual growth loop. We begin by acknowledging the mathematical reality of index fund theory. When we purchase a broad market index tracker, we are not betting on a single CEO or a specific product cycle. We are capturing the aggregate output of human ingenuity. We are investing in the systemic drive of global industry to solve problems and generate value. In the ledger, we view the index fund as a self-healing organism. It sheds the weak and amplifies the strong automatically, without requiring our permission or our cognitive energy. This is the ultimate survivability test. While the active trader agonizes over which horse will win the race, we simply own the track. The implementation of this system requires the removal of the human element at every possible intersection. We call this the automation protocol. In our design, the flow of capital is treated like water in a well-engineered irrigation system. On the day the life ROI is deposited, the income from our primary labor, the system triggers a series of pre-programmed events. Before the ego can intervene, before the dopamine-seeking brain can suggest a speculative play, the capital is partitioned. A predetermined percentage flows into a high-yield vault, a buffer zone designed to neutralize the anxiety of volatility. This vault is our peace of mind insurance, a low-friction cash that ensures we never have to sell our growth assets during a market contraction. Simultaneously, the remainder of the surplus moves into the diversified index trackers. This is where we leverage the physics of compounding. Compounding is a silent force, often misunderstood as a linear progression. In reality, it is a delayed explosion of value. By automating the contribution, we remove the friction of decision. We do not ask if the market is too high or too low. We recognize that timing the market is a form of hubris, a belief that our individual perspective is superior to the collective pricing of millions of participants. Instead, we embrace time in the market. We become indifferent to the fluctuations because we have designed a system that thrives on them. Every dip is simply a moment where our automated purchase acquires more shares for the same cost. We have successfully turned the noise of volatility into a mechanical advantage. The 15-minute ritual is the only point of contact we maintain with this machine. Imagine a quiet Tuesday afternoon. The light is soft, filtered through a clean window. You sit at a desk that is free of clutter. You do not open a dozen tabs or look at trending topics. You open the ledger. You spend 5 minutes confirming that the automated transfers were executed. You spend another 5 minutes verifying that the asset allocation has not drifted beyond its designed parameters. If a rebalance is necessary, it is done with the cold precision of a technician, moving funds from the overextended to the undervalued to maintain the equilibrium of the system. The final 5 minutes are spent in reflection, acknowledging the silence. There is no adrenaline, there is no fear, there is only the tactile satisfaction of a system functioning as intended. You close the monitor, and the financial world ceases to exist for another 30 days. This is the rejection of the high-stakes myth. The industry wants you to believe that wealth management is a complex, high-energy endeavor because complexity sells products and captures attention. We choose the opposite. We choose the quiet wealth of the minimalist. We recognize that the most sophisticated system is the one with the fewest moving parts. By reducing the number of decisions we make from hundreds per month to nearly zero, we reclaim our cognitive sovereignty. We must also address the lifestyle creep that threatens the integrity of our architecture. As the perpetual growth loop begins to yield results, the temptation to signal our success grows. This is where the behavioral strategist must remain vigilant. We do not increase our burn rate to match our rising net worth. Instead, we maintain the quiet in quiet wealth. We recognize that the true luxury is not the possession of objects that signify status, but the possession of time that signifies freedom. Our system is designed to fund a life of meaning, not a gallery of trophies. As we automate the ETF contribution and the vault deposits, the friction of decision-making vanishes. We are no longer investors in the traditional sense. We are the owners of a self-sustaining utility. The energy that was once wasted on market anxiety is now redirected toward our true work, the things that provide a genuine life ROI. We have engineered a reality where our wealth grows in the background of our lives, like the steady, rhythmic breathing of a person in deep, restorative sleep. The system is invisible, silent, and relentless. It does not need our encouragement, it only needs our non-interference. We have mastered the art of doing nothing, and in doing so, we have gained everything.
The harvest of a well-architected system is not merely the accumulation of digits in a digital vault. It is the reclamation of the human experience. In the traditional financial narrative, the yield is a percentage, a cold metric of capital expansion. In the anti-hype ledger, we redefine yield as life ROI, the return on the investment of our finite time on this earth. When the portfolio is automated, the decision fatigue that once plagued our mornings is replaced by a profound, heavy silence. This is the economics of silence, where the value of a day is measured by the absence of unnecessary urgency. Consider the shift in your internal geography. For the active trader, the horizon is always shifting, marked by the jagged peaks of volatility. For the system strategist, the horizon is flat, calm, and predictable. We have successfully decoupled our sense of security from the erratic behavior of the market. This is the ultimate survivability test of the spirit. Can you remain indifferent to the hype when everyone around you is succumbing to it? By automating our execution, we have built a psychological fortress. We no longer need to be anyone in the market's eyes. We do not need the validation of a lucky trade to feel competent. Our competence is proven by the very fact that we are no longer looking. We have moved from the artisan saving of our ancestors into a modern, frictionless state of grace. This is where we encounter the concept of financial dignity. It is the ability to walk away from the noise without looking back, knowing that the machine we built is working tirelessly in the dark. It is the tactile satisfaction of closing your laptop at 4:15 p.m. on a Friday, not because the market closed, but because your work, your true work, is finished. The hustle culture lies tell us that we must always be on, always optimizing, always tweaking the dials. We argue that the highest form of optimization is the total removal of the need to optimize. We have achieved a state where the cost of doing nothing is zero, while the life ROI of our reclaimed focus is infinite. The ASMR of this process is found in the stillness. It is in the soft glow of a monitor at the end of the month when you realize you haven't thought about your net worth in 30 days. It is the deep, steady breath taken in a park while others are frantically checking their phones. As we sit in the soft light of a late afternoon, the world continues its frantic, noisy spin. But for us, the friction is gone. The perpetual growth loop operates with a low hum, nearly imperceptible. We have traded the dopamine spikes of the gambler for the deep, steady satisfaction of the architect. We have replaced the chemistry of burnout with the chemistry of presence. This is the final stage of the ritual, the realization that wealth is not a destination to be reached through struggle, but a background condition to be engineered through silence. We have exited the treadmill trap. We are no longer running, we are simply being, while the world we built sustains us. This is the quiet triumph over the hype. The ledger is now closed, its numbers settled into the quiet rhythm of the system. We have stripped away the hype to reveal the core of financial dignity, the preservation of your time as a sacred asset. May you carry this silence into the world, moving with the calm assurance of one who has already won the only game that truly